Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the Forex market. So today I think that we could make some specific analysis dedicated to the Japanese yen. It's because Japanese yen is some kind of the unique currency. It's just because of the structure of the national debt market and general it's a monetary policy, while you could see across the board that all central banks right now thinking about the tightening. Japan keep going with the easing program and printing more money, so although they already have printed a lot together with the J7 countries during the pandemic. The bond market in the Japanese yen is also very specific because first of all they have approximately 2 times greater debt to the gross domestic product, so around 200%. And the second, in fact, it is no foreign investors. So the most part of the domestic debt is buying by the Bank of Japan, is holding by the Bank of Japan. So in fact, they issue bonds and they are buying them. So just kind of the money printing process. Well, this specific performance of the Japanese yen and currently the difficulties that the economy is meeting with the decreasing of the export revenue. It's just because you understand that the Japanese economy is export oriented, and from that standpoint this is a double impact. So first of all, overall fundamentals are not really very strong, and currently Japan is also losing some results from the export activity. And this tells us that in a longer term perspective, Japanese yen should keep going lower. So here on the chart we see it's going up, but in fact this means the weakness of the Japanese yen. And right now I think that we could take a look at the two different charts. First of all is the Japanese yen to United States dollar, and second, Japanese yen to the Great British pound. That will clarify a lot of interesting things to us. First of all, let's take a look what we have on the Japanese yen to United States dollar chart. So we have this large ABCD pattern, which is in fact the head and shoulders, with the OP around 150. On the way up, market is also coming to the 1618 extension of the butterfly. It's 142 target. This target has been passed without any response, and that is the next target. So this level is very important. Why? It's just because if you take a look at the larger scale, so on the FX choice chart you do not see it, but if you will take a look at high time frame and on a Saxo Bank, for example, chart, you could see much more history since 1987. And you could see that based on this history, the market is currently flirting with the major all-time 618 resistance, 139, right here. So in fact, the butterfly target that we have, 142 and 139, the major 618 level, coincide in a tight range, which suggests that theoretically it might be some temporal pullback here, some reaction on this resistance area. So with this pullback, if it will happen, as you know, usually it suggests 30% retracement with the butterfly. So maybe market will retest this, some kind of the neckline or something that's right around 125, 124. This is if everything goes with the theoretical way, how it should be. But even minor pullback here might be the objective for those of you who are searching chance to make the bet on the weakness of the Japanese yen with a further upward continuation. That is the first moment that we would like to show you today. Second moment is also very interesting. Now we're turning to comparison with a chart in relation to the Great British pound. So you could see here it is. This is monthly chart as well. And here you could see that in general the patterns are very similar. So here we have the ABCD to the upside, And on the relation to the United States dollar, we'll also have, sorry, this is daily chart, of this ABCD pattern. Here we have the room till the OP, right, in relation to dollar, and in relation to cable, we also have room to the XOP with this ABCD pattern, this blue, and this take a look large ABCD pattern with the COP, which stands around, these two targets very close, 173 and 176. So very close in this area. At the same time, you could see that in relation to dollar, yen should drop more. It's just because it is more extended compared to the previous top. If you'll take a look at the Great British Pound, which tells us two things. First of all, as to relation to cable, as relation to the dollar, Japanese yen should keep going lower because targets have not been completed, which means that after it will play with the butterfly that we have here, the further downward upward action probably will continue. Second, you could suggest the weakness of the Great British Pound also in relation to United States dollar. That's actually what we talked about a few days ago in our analysis on the monthly chart of the Great British Pound, because potential performance in relation to cable significantly smaller than the potential performance of the yen in relation to United States dollar, which means that cable to dollar currency pair also should keep going lower. So that's as we usually use the cross-market analysis, which provides us lots of interesting stuff that might be important and vital even in the long-term analysis of the different chart. So using of the cross-market is very useful, especially when you do not see some clear signs on a direct chart, for instance, on the cable chart. So that's what I would like to share with you today on Forex market, and let's keep going. Let's keep going with the analysis of the euro currency, watching what will happen today. So today retail sales will be released, and let's see what performance will be. Because market currently, I mean, the euro stands very tight in around parity, and we probably should see some decision making from the investors, what they will do around this level, and we suggest that market should keep going lower in general.